Okay, so thumbs up. Everybody can see my screen.
Good. You're good to go,
All
Rob.
right, off we go. Good deal. All right, so I'm really happy to talk to you all. I was looking forward to the analyst that's going to come on. I'm sure I'm going to learn something from her. I'm going to be focusing on the financial side and kind of the monetary side of cryptocurrencies and blockchain. And I'm anxious to hear what she has to say because there's some probably real applications for you as engineers and as business people. So there's four things that I'm going to go through and explain. You will own a cryptocurrency in the next 5 years, whether you believe it or not. What role are cryptocurrencies playing in general and Bitcoin specifically? What's the most important part of this whole cryptocurrency phenomena? And what does it mean to you as an investor and a business person? So I was pretty early on as far as the financial realm of understanding and actually recommending cryptocurrencies. So I wrote a position paper in January 2015 that explained, you know what, this is what's coming. We need to pay attention to this. And now, granted, in the technology space, I was probably by 2015, I was probably realistically at least 2 years, if not 3 years late. Okay, but I'm not a technology guy like you guys. I'm an investment guy. So from the investment world, I was early. And if you just watch CNBC the last 2 weeks, I get a roar because I have it on in our office, both in my office, in the lobby, and in the conference room. And I see these guys on there trying to be experts. They are running as fast as they can to catch up so they can sound smart about something they really do not understand. So in January 2015, I recognized that this is clearly something we need to pay attention to, that investors should be participating in some capacity. And then I think this past month has solidified that we are looking at an asset class that could be labeled legitimately cryptocurrencies. But you know that I'll touch on that lightly at the end. So January 2015, I made a recommendation that you should buy Bitcoin under $350. And I said, you know, look, if you just threw $1,000 into it, that you would be able to pay for your children's college education or a down payment for the home for one of your kids. At that point, I said that 12,000 was a price limit. Now, I didn't mean that 12,000 was only as high as it was going to go. I meant that this was 2 years ago. I meant that 12,000 would be a level that it caught the attention of the central banks, and that there would be some kind of movement to gather this new technology and harness it in, which is one of the main things we're going to talk about on this webinar. So I knew I was right January 2015, and then you see on your screen here, the Bank of Japan introduces negative interest rates. Notice the date. This is January 29th, 2016. So we all heard about the lost decade of Japan. Actually, it's the lost quarter century, meaning that their economy was just not going anywhere. And forever and ever, people thought, well, you can't go below zero, right? You can lower interest rates, and you can't go below zero, correct? Wrong. You can go negative, and Japan, and there's a bunch of countries in Europe that have done this as well. But when I saw what I'm going to show you next, when I saw this happen, I realized this is a complete game changer for cryptocurrencies and their future. And that is, so you can see the date here, January 29, 2016, Wall Street Journal, Bank of Japan introduces negative interest rates. Now look at the headline 3 weeks later. Japanese seeking a place to stash cash starting snapping up safes. Safes meaning a big metal thing with a dial that you could put in your apartment. Why were they doing that? Well, the Bank of Japan figured, okay, we don't want your money in our bank, so we're going to charge you. That's what a negative interest rate is, right? So here in the United States, you go put your money in a bank, they're going to pay you 1%, right? In Japan, starting January 2016, you had money in the bank, they were going to charge you having money in the bank. So what the Bank of Japan, the BOJ, was trying to accomplish is, look, we don't want your money in the bank, take it out and do something with it. What they wanted them to do is go buy a piece of equipment or hire somebody. Well, if you're coming off the lost quarter century, you're not going to be excited to go buy a piece of equipment or hire somebody because the economy's in the dumps. It's not going anywhere. So the Bank of Japan thought, well, at minimum, take your yen out of the bank and buy US dollars. Japan is an export economy. They figured, you know what? If you sell yen, buy dollars, that drives the yen down in value. You're an export economy, cheaper yen, cheaper goods, everything's sold cheaper in the marketplace. Okay? So that's their brilliant plan, the central bank, right? But what did the Japanese people do? They took the largest denomination yen they could out of the bank and they put it in a safe in their apartment. This drove the Bank of Japan bananas. Okay, this sent a shockwave through the entire system, and the shockwave was quickly followed by the Brexit. Right? Oh, we're going to give the British people a chance to vote on their future, full well thinking that they weren't going to be so stupid as to garner independence, number one, for their economy, and number two, stop this mass immigration of Muslims leaving the Middle East, right? So they said, we'll give them a vote. They're going to follow what we do. Well, guess what? The citizenry, just like the Japanese, did the exact opposite of what the financial elites wanted them to do. So this is a noose, and this noose is closing and closing, all right? So why did I put a price point of 12,000? Well, we've blown through that, but just so you know, we blew that through that in a month's time. So what do I see as far as you watching this as an investor or business person? What is the future of cryptocurrencies and Bitcoin specifically? Because we'll talk a little bit about that. Well, unfortunately, and I say unfortunately, the future is control. Okay, why do I say that? Because history repeats itself. The Federal Reserve was founded in 1913. It's a central bank. We already had three central banks that failed. The reason Andrew Jackson is on the $20 bill because he bet his second presidential term on abolishing the national bank because it was out of control, and meaning it had garnered too much control. Well, the dynamic that we saw in 1913, so let's really call it 1900 all the way up to about 1912. There was a dynamic going on in the west part of the United States that we are seeing on our computer screens right now. And what that was is this massive expansion out west with cattle and farming and merchandise and industry and oil wealth. You had all these people that were making money in St. Louis, in Lubbock, in Tulsa. They were making money there, and guess what? They wanted to keep their money local. They didn't want to ship it back to Boston, New York, and Philadelphia. Well, the Boston, New York, Philadelphia, which is really the right arm of the London banks and the London money families, they didn't like this competition. They didn't like the fact that you had all these John Waynes out there that said, well, we need a general store. I've got money. I'll just open a general store. I'll open a bank. I have money. And so the Federal Reserve came up and they couldn't call it a national bank. Just so you understand, that's why it's called a Federal Reserve. And what they did is they played on fear. They played on fear by trumping up all these stories about Mrs. Jones put her deposit in the bank and the bank had lent it out to some farmer, or the bank did this, the bank did that, and Miss Jones lost her money. And so they just played on fear that, you know what, these bankers, these Yahoo bankers out here don't know what they're doing. They don't understand reserving. They don't have any kind of ledger system. So we need to have some kind of law, right? And so this was really the reach by the politicians and the New York banks to reach into the West and capture the competition that was cutting into their business. Okay, you follow? So how do I know this? And just to understand, when our country was founded, our founding fathers knew this. There was two things they railed against. There was two things that they feared that would cause the great experiment, the United States, to fail: banking, having some kind of central bank, and taxation. If the federal government was ever able to tax, they knew that the states, which everything is independent, right? Our country was founded on independent state status, that the states would belly up to the feeding trough of the federal government once the federal government was able to tax. So here, I'll read this. We all need to read it together. Thomas Jefferson: if the American people ever allow private banks to control the issue of currency, first by inflation, then by deflation, the banks and corporations that will grow up around the banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. The issuing power should be taken from the banks and restored to the people to whom it properly belongs. Does this sound like Bitcoin? Does this sound like cryptocurrency? This is exactly why this was started in 2009 after what? The great economic collapse, where you had all these banks that had massive failures. The Fed steps in. They pick, okay, we're going to save Bear Stearns, but we're going to let Shearson go under? Who gets to choose that? So all this cryptocurrency said, you know what, we don't want any more of this central processing. We want to be able to take this away from the federal government. Okay, so I'm a huge fan of cryptocurrencies and what they are trying to do, but I know history, and I know that history is going to ultimately capture all these cryptocurrencies and capture the blockchain. When, I don't know. In the blog I wrote a week and a half ago, you know, people now that Bitcoin's had this huge run up, they're like, it's a bubble, it's too high, blah, blah, blah. And I said, look, the price point for Bitcoin, because remember, I originally called it buy it under 350, then the original target would be 12,000. I said, you know, when it was 11,000, when I wrote my blog a couple of weeks ago, I said the price point is somewhere between 11,000 and 100 million, right? Or 1 million. So it's somewhere in between. I think it's going to go up, and we'll get to this later, but it's going to get up only to a point, because eventually history will repeat itself and these central banks will come in and they want to take back their control. They see the cryptocurrencies as a bunch of John Wayne banks in Tulsa, Lubbock, and St. Louis. So inflation. You just saw Thomas Jefferson talk about inflation. Does inflation have any risk in a cryptocurrency? It's limited, right? It is limited. You're going to see it, right? Went through reproductions and splits. You're going to see that it has inflationary tendencies. You see this in Bitcoin split. So there is the point of inflation, but because they are limited, inflation at least has a better chance of being mitigated. All we have to say, I'll say two letters, QE, quantitative easing. They're just printing vapor money, right? We've just gone through all this. That is inflation. They're trying to generate inflation. That's the danger to central banks. We have to look at Venezuela, for crying out loud. This is happening right before our very eyes, right? So inflation is a real problem. It's a thief. And that's exactly why the central banks want to take control. So just so you understand, they're looking at cryptocurrencies and they realize, wow, this is really dangerous to our mechanism of controlling money supply and being able to inflate at our whim. So how are they going to do this? Again, just like fear, the fear they used back in 1913 is the exact same fear they're going to use now. So what are they going to do? This is a chart you're going to start seeing more and more and more. You're going to see it in the Wall Street Journal. You're going to see it on CNBC, and they're going to show you the volatility of Bitcoin versus the dollar, right? And so what they're going to say is, look, these rogue current cryptocurrencies, there's way too many swings up and down. We've got to do something about it. Or they're going to show you this. They're going to show you all these different exchanges. Look at the price differential between Bitcoin, the single coin, on all these different currencies. We can't have this. You can't have different prices for Bitcoin on different exchanges. Really? You can't have that? I have a client who makes anywhere between $600,000 and $1 million a year personal income. Why? Because he has an institutional investor that deposited $120 million into a Forex trading account, and all he does is try to make razor thin profit trading currency arbitrage. On $120 million, he's trying to make razor thin profit every single day. He makes this investor high double-digit returns, and he puts between $600,000 and $1 million in his pocket. Who says you can't do this? This is happening all over the place. And oh, by the way, this speaks to this. I heard some analysts talking on there that the IRS is going to come in. They don't, they're going to shut this down. They're not going to shut it down. The IRS already taxes currency trades now. The platform's already built by the Internal Revenue Service. They already know how to tax this. They're going to do the same thing here. Just face it. They're going to start taxing profits on cryptocurrencies. It's just the way it's going to be. They're not going to miss their pound of flesh. Another fear factor they're going to build in, the power. Deutsche Bank came out with this analysis that made the paper, all the news recently over the past quarter, that the power consumption for Bitcoin mining worldwide now amounts to 24.52 terawatt hours annually. Okay, so I understand that, but I know I'm talking to a bunch of software engineers. So when I say this term, see what I'm saying here, quantum computing. When I say that to this, people, their heads spin off. They don't know what the heck I'm talking about. Everybody on the phone probably understands quantum computing. Quantum computing is going to change everything. All these articles about artificial intelligence, that is nothing compared to what quantum computing is going to do. And I believe quantum computing is going to be ushered in faster because of all of the the energy being used for the cryptocurrencies. So I'll let you engineers debate more about that. That's out of my realm. Okay, so Bitcoin. Let's talk about the price because I think this is what's driven me nuts the last 2 weeks. I'm showing you a stock chart, okay, from 1990 to current day. So if I was your stockbroker and I called you up and I said, look, this is a stock I think it's going to do. I think it's going to be kind of sleepy for a while, but if it's a long-term hold, I think we're going to do really well. And you said, you know what? Yeah, I think I'll buy this. I think, if this is what you think it's going to do, let's buy it. Okay? Everybody on the same page? Now, let me show you where 11,000 is. That's 11,000. This stock chart, the star represents 11,000. This stock is currently trading a little bit under $300,000. It doesn't matter what the price is. What matters is what will happen to your money. If your 11,000 doubles to 22,000, you're happy. It doesn't. Everything can't be on a particular price, meaning, oh, it's too high, it can't go higher. And if you think this is some fluke company, you're wrong. This is Berkshire Hathaway. This is Warren Buffett's Class A stock. Don't tell me that this isn't mainstream, that Bitcoin is too expensive at 16,000. It's not. It's expensive at 16,000 if it goes down to 10, but it's inexpensive at 16,000 if it's on its way to 100,000. So quit focusing on the price of Bitcoin. Don't say, oh, I shouldn't buy Bitcoin because it's too expensive. How do you know how expensive it is? There's a thing in stock trading called a PE, a price to earnings ratio. We use it very, very easily and with quite effectiveness when we're picking stocks, right? Because we can take a stock, put it within its industry, find out what the price to earnings ratio is for the industry, compare that individual stock to its industry to tell us if a stock is cheap or expensive. There's no context for us to measure that with cryptocurrency. The closest context you're going to get is the ratio of overall money in the system, right? That's the only thing you're going to be able to measure it against. And right now, cryptocurrencies are less than 10% of all available monetary measurements. So let's move on to, let's leave cryptocurrency and let's go to the technology underneath it, right? Blockchain, distributed ledger technology. I'm going to share a story with you, right? So you see this house. This is actually from my iPhone. This is the house my son in Dallas just closed on the week before. Well, he was supposed to, it's a good story. He was supposed to close the week before Thanksgiving. We flew out to, all excited. We're going to, christen the house going in. He had, in order for him to close in the house, I had to send him $15,000. I wired it from my Bank of America to his Bank of America. I did the internal transfer, and he had to take $12,000 out of his retirement account from Voya. That's the custodian. Okay, so he's sitting there getting ready to close this, and the bank says to him, well, you have to prove that your dad wired you this $15,000. Why do they do that? Well, because they want to make sure it's not drug money, right, or whatever the reasoning. So what do? I pull up my Bank of America account on my screen. I take a snippet. I take a photograph snippet of my screen, email it to him, and he emails the banker. And the banker says, nope, not good enough. It's got to be from the actual bank itself. Okay, so I got to go to the bank, and I got to have them pull up a statement. I take a picture of the statement on the phone, send it to them. Nope, we got to have the actual statement. Now I have to take the statement. I got to scan it and email it to him. Nope, still not good enough. We need to show that it cleared your bank. So he's got to go to his local Bank of America, and show that it cleared on a Bank of America statement that it cleared his account. Same thing for Voya. When the deposit came in for Voya, nope, you got to show, Voya has to show an actual statement that shows the money was cleared out of their account. So you see where I'm going with all this? That's why it takes 2 months to close, to get ready to close on a house, because you got all this verification. With the smart contracts, which is the basic difference between Ethereum and Bitcoin. Bitcoin is just a currency. A lot of these other technologies, blockchains coming out, have all the smart contract capability. This is an example of what is going to change everybody's life, right? That everything that's associated with closing on a house, between what I just described and all the title search, right? Getting a clear title, you got to have a clear title. All that stuff is going to be uploaded to an open ledger, and everything, just like computing, you all know this, everything is if, then. If this occurs, then this occurs. And so that's the real beauty of all this, of blockchain. The reason cryptocurrencies work is because of the blockchain technology. And this is going to be rampant across every industry. So I just gave you a personal example. So, and here's a couple. I could go through pages of this, but I'm just going to give you a few that just caught my eye. In Germany, energy supplier RWE develops the usage of blockchains for charging stations of electric cars. The NASDAQ uses the link for authentication and certification. This is all blockchain technology that these individual companies built themselves. Unity Settlecoin. This was a blockchain that was developed for a bunch of banks. UBS, Mellon, and Deutsche are all using this for banking and stock brokerage execution. Blockchain is being developed for tamper-proof elections. So this whole Alabama thing, I'm telling you that this Alabama thing, if there's any whiff, and I believe that there was election tampering going on, I believe that the powers that be set this Alabama election up to show that there was tampering going on, and they are going to take that and they're going to run with it in order to fix it by the midterm elections. I think Trump is that sophisticated. Everybody thinks he's a buffoon watching television 4 to 8 hours a day. I think that's just a bunch of garbage. I think the guy is very bright and ahead of the curve, and I think this Alabama thing was set up, and they're going to determine some kind of blockchain technology that's going to have a tamper-proof election process. You're already seeing it in the music industry for copyright infringement. So my point is, I can go on and on and on with this. So where do you go from here, right? Like I said, should you buy Bitcoin? You should absolutely buy Bitcoin, but pay attention to the others. You'll get pull through of a bunch of others. I like Ripple. I wrote about this 2 weeks ago. I think Ethereum. I think Litecoin. Litecoin had a huge move recently. So the point is that you pick some of these major technologies, or I should say major currencies, you're not going to go wrong. These are going to go up. Why is Bitcoin so important? And I'll kind of circle back and tie up some loose ends here. Bitcoin is best in class. That's why you should own Bitcoin. Do not own Bitcoin because you think you can get a better valuation on Litecoin or Ripple or Ethereum. The reason Bitcoin is important is because it's best in class. Because the central banks are looking at this phenomena, and it's like fishing. You get something hooked and you let it run. Why? So you can set the hook stronger. All of these companies, there is now one ICO, initial coin offering, one ICO occurring every single day. If you're the central bank, if you are the International Monetary Fund, which is where everything's going to be rolled up to, you want all the kinks worked out. If you're going to roll out a global currency and a global electronic currency, you can't have any kinks. So the role that cryptocurrencies are playing today is to work out all the kinks, all the theft kinks, all of the power computing kinks, all that stuff. And the more competition comes, the better it's going to be. But today, Bitcoin is by far best in class. They have the widest acceptance of buying things, which is going to drive more and more users. It's going to drive more and more acceptability into all these different small countries that are just simply going to say, we don't need our currency anymore. We're just going to flip to a cryptocurrency. We're going to use Bitcoin. Why? Bitcoin has the most penetration. So you should own it for that reason alone. But you should also own some of these others. Now, I wrote 2 months ago to investors saying, look, I'm done with my analysis on what is the next hot cryptocurrency. It's moving too fast. My expertise is investing in asset classes, helping people save for retirement, setting up sophisticated tax structuring for business owners and high net worth in order to have the retirement of their dreams. That's what I'm good at. This stuff is moving so fast on the cryptocurrency, I can't tell you which is going to be the next Bitcoin. I have analysts that I trust and I send that out, but folks, it's just moving too fast. So just be cautious. Now the next big thing is, hey, pay me $4,000 for my newsletter and I'll tell you who's going to be the next Bitcoin. I think that is profiteering that I think is unnecessary. There are some good analysts out there that are following this, but if you just stick to some of the major names now, because I'll use a very crude example. What you see on your screen, Bitcoin, Ripple, Ethereum, Litecoin, this is the equivalent of the FANGs, right? Facebook, Amazon, Netflix, Google, right? If you own the FANGs, you're not going to go wrong. If you own these 4 basic coins, you're not going to go wrong. So I'm looking at my clock. I went a solid 25 minutes for you, Vince. I hope this was helpful. So I'll turn it back to you all.